still hedged that risk, warning the supply chain imbalances have meant sizable price increases in some sectors, though the Fed will continue to be patient and monetary policy will continue to provide strong support to economic recovery. Just to show you what he means by transitory, and the old statement, he said that transitory factors are contributing to inflation. This time, they said that factors that are expected to be transitory are leading to inflation. So the verbiage before yesterday was transitory factors lead to the transitory, this inflation that's transitory, supposedly. And this time they changed that wordage from transitory factors to factors that are expected to be transitory. That is what you have going on with these statements that people are trying to figure out what they mean. These guys play games with words. So they hedged themselves big time. They took the high road on this transitory problem because things are not turning around as fast as they thought. So we'll see. This taper was probably the best telegraphed or advertisement move in monetary policy history. It's funny. It was more than dovish than markets expected. Anytime there is a whiff of lower rates, we tend to be favorable market reaction. And the whiff was considered to be that he said that they're not expected to raise rates anytime soon. Some central banks are getting more nervous about inflationary pressures. The Bank of England today is likely to become the first leading central bank to tighten policy in the post-pandemic era, with money markets predicting that at least a 15 basis point move higher. The Bank of England last raised its official rate in August of 2018, but cut it to an all-time low of 0.1 at the start of the coronavirus crisis. As we come back up here to our pivot in a very, very, very quiet, very unexcitable kind of morning. So patience is important. We do have unemployment tomorrow, so we'll see what happens. Probably going to be a quiet trade into this afternoon, and I hope we can get a chance this morning. Great. If we can't, we just be patient and wait for tomorrow's opportunities, which may or may not come. We just don't know, right? We just never know. One day at a time. And that's why we're traders. We just don't know. Obviously, if you want a regular job, then you get a regular job. Now, if you might have a regular job, that even helps because you can trade and you can have a regular job. That'd be good. Or if you have a business, fall back on. That's really better. That's where we're at. Wish I can give you I wish I could tell you we're going to be busy today or tomorrow. Well, tomorrow, probably tomorrow. I would say tomorrow might be at least busy in the morning. See what happens after that. Some pediatrician offices and hospitals began giving shots to children between the ages of 5 and 11 on Wednesday, a day after the CDC recommended the use of the Pfizer vaccine for the age group. Government officials expect the campaign to pick up in earnest next week when many school-based clinics and pharmacies start inoculating children. The Biden administration has also procured 65 million doses for kids with nearly 28 million children in that age bracket in the United States. Well, that's nice that they got extras. Children 5 to 11 will get 2 shots of the vaccine 3 weeks apart from each other, but at the lower dosage and different packaging than used for adults. Kids that are even younger will have to wait a little longer. Pfizer said results from the study in a vaccine in children's ages 6 months to 5 years could come during the fourth quarter of 2021. As we are just back in our range that we've been at, most of them trading night and morning. So very, very quiet. It extended a little bit and just kind of just very quiet, very quiet, right? Right. Resistance on the upside is at the 63 area. Well, low resistance. I don't know what's going to happen. You never know what's going to happen. All right, we're kind of maybe going to test our 63 area. Maybe, I don't know. Thought we were going to test our 52 below, and that stopped. So right now we're inching our way up here. See what it wants to do. All right, coming up here to the 63 area. All right, nice little rotation there off our 63 area. Not too bad. Take what the market gives us, considering it's so slow. Trying to poke its way down here. There we go. Nice. All right. That's not bad, considering it's so slow. I think we can all go home now. Probably. We could go to the beach. Not only that, you got filled on everything, top and bottom end. Nice trade. Right. I'm not patting myself on the back. I'm just saying nice trade for everybody. Right. I hope. Hopefully you got in. Even if you got in at 63, you did okay. Right. Right. So that's good. Yeah, that's good. I like those. Sometimes we come up here and we go to 62.75 and we miss it by a tick or two ticks, and then we rotate off and we're like, oh well, we just got filled, and some of you didn't. So, but today everybody should have got filled, and then we had a nice rotation, so everybody should have got their rotation. So everybody did okay. I hope. Can't complain about this one. Some of you did it. So I always like when I say that, I feel like I'm hedging, but it's the truth. I mean, I know some people scaling differently than others. That's all. It's just part of the game. And when the new people come in here and they're like, "Oh, you didn't. You said 63, got up to 62, and you're saying you made money." I'm like, "Oh, you know, it is what it is. What can I tell you? I don't make the markets. I just trade them." But today, nobody can say nothing about the 63. It was a 63. Good job. Good shot. All right. Now, again, like I said, anything above here is open territory. Anything could happen up here. and gotta be patient and wait. Next level of resistance we have is up at the 69 area. If anybody has any questions, feel free to ask in the chat box area. We can only trade what the market gives us. Sometimes it gives us a lot of opportunities, other times not so much so. And that's where we're at. Now we're just kind of hanging up here. All right, next level of resistance we have is up here at the 69 area. Well, they just, they just think that there's more opportunity that's upside, more upside to help, I mean, it just doesn't seem like it's going to slow down anytime. I mean, just the markets and valuations. The valuations of the companies are going to be different, that's all, so they don't want to be left behind, right? It's really the bottom line. That's why they keep going up and they keep buying it up here. But like I said, you gotta make sure you stay focused and keep your stops in place. Coming up here to the 69 area. Anybody has any questions, feel free to put them in the chat box area. No, we are not going to be long at 69. We would be short at 69. It's an area of resistance, not support. So we would buy support and sell resistance. The 63 area, when we got to it, was a little resistance area. So that was our first area of resistance that we sold the market against. And now the market is coming up here to our 69 area. So that would be our next level of resistance that we have. So if we were buying it, you would probably have bought it. Well, you bought it down at 61 when it rotated down off of 63. And so we're flat. And now we're coming up here to the 69 area and working this area right now. Again, make sure you keep your stops in place. Nice little big order there, kind of holding the market off there at 1,000 lot, coming in there at 875. Seems like he wants it. There, he's holding it up, that's for sure. So he's kind of just hanging here. So they're getting hit. He got hit. He got taken out. Usually the case with these big orders. They're there to get taken out, right? That's what big orders are there for. If we can repeat the levels in the chat box area, you will see the levels that we use as a guide to the day, and those levels are there for us to use as support and resistance areas that we are targeting for the market to try to give us an opportunity to trade. Those are levels that we are focused in on. As you can see, the 63 is the first level of resistance we had, which we had a nice rotation off of. Then we've come up here and we're working the 69 area now. We're looking for about 2 to 3 points with the 2 to 3 point stops, and depending on your risk tolerance and how many contracts you trade. But we're looking for the same 2 to 3 point stops with the 2 to 3 point target areas for profit potential. So the combination of these levels plus any price action opportunities that occur once the market paints some bars gives us the opportunity to trade. And we're getting a nice little rotation here against our 69 area. Again, we're scalping against support and resistance areas that we gave out this morning. As you can see, they are up there. And we use those as a guide to the day. And right now we are working the 69 area here, trying to get a little bit of a rotation off of it. We had to live through that big order in there. But once we got through that, we were doing okay with it. Again, it got up to 70 and change, so there's, again, no reason why you couldn't have got in, even if you're scaling, whichever way you're scaling, or even if you're not scaling. And we're getting a nice rotation here, and there's our 2-point rotation against our 60, 1-point rotation. We're just getting, 60, yeah, we got to here to 68. What am I talking about? There's our 2 points. So again, nice trade there. If you're able to jump in there with us and take advantage of this resistance area, again, we are trying to find areas of inflection. The levels that we gave out this morning are used as a guide to the day. If we can repeat the levels one more time in the chat, for those of you who might have missed it, those are levels that we're using to help us find these areas of inflection that we believe the market will give us a chance to scalp. And they are there for us to guide us, being patient, wait for those opportunities. And when they present themselves, we try to take advantage of it. And market, we had to wait a little bit. We were a little slow this morning, but once we got going, we did okay here. And now we're just kind of floating back and forth, see what it wants to do. If you're trying to stay short, if you are so inclined to try to stay short, just have a trailing stop or a stop above 71 to be out of any shorts. Yeah, that's the same 1,000 lot that he bought a half a point below. He's selling it here. Scalped it for, what is that, 1,000 times 25? That's 25,000. He bought them first time and he sold them this time. Scalped it for, what is that, 1,000 times 25? That's 25,000. So he bought him first time and he sold him this. Sure, it's not. Maybe it is the same guy. Scalped it for what is that? 1,000 times 25. That's 25,000. Can't believe he's scalping it for 2 ticks. So he bought him first time and he sold him this. Sure, it's not. Maybe it is the same guy. Scalped it for what is that? 1,000 times 25. That's 25,000. Can't believe he's scalping it for 2 ticks. So he bought him first time and he sold him this. Sure, it's not. Maybe it is the same guy. Scalped it for what is that? 1,000. Somebody's calling you out. Again, if anybody has any questions, feel free to ask in the chat box area. We are trading mini S&Ps, looking for opportunities to scalp the market. How do we come up with those levels is what we do teach in our education course. This is just our trading room, and then we have our education course that lets you find these levels. And also, in addition to that, finding price action opportunities that occur once the market paints some bars. If you look at the chat there, there's our website for you. You can get more information on that over there. The goal of the course is for you to, as a trader, to come up with these levels on your own and to be independent of anybody else. Find these opportunities and trade them independent of anybody. All right, we're just kind of hanging here now. We are flat. Don't have anything going on. Just kind of wait and see what the next opportunities could present to us. Next level of resistance we have is up at 74. Right now, our support level would be down at the 61 to 62 area. So in the middle here, kind of we call this a no trade zone as we wait for the market to kind of give us an opportunity to trade. But we have to be patient and wait for those opportunities to present themselves. We don't like to just keep trading for the sake of trading. And we're looking again for about 4 or 5 different trading opportunities on average. I think we can say that we probably get 4 to 5 opportunities to trade on average. Every day has its own set of uniqueness to it. Every day has its own trading dynamics. Some days are very busy. Some days are very quiet. Some days are nothing. You know, you just never know. After all, this is trading futures contracts, equity futures contracts. So has definitely its own set of uniqueness to it. If you've ever done this before, if you're interested in doing it, let us know. We can help you out there. And so we talked about the Fed and how that's affecting the market. Obviously, they liked what they said, and we talked about the verbiage that was used in the market. Why am I using the 5-minute time frame? It seems like the 5-minute time frame gives us enough of an opportunity for us to stay in a trade and to give us the levels that we are looking for, in addition to other time frames as well. But it seems like it's a good amount of time to the opportunities work out well for us using a 5-minute versus the other time frames. there are obviously different time frames for different markets. Some markets are maybe you need a different, and also what your goals are and your um, as a trader, what you're trying to achieve. Are you scalping? Are you taking position trades? Well, what is your goal as a trader? I mean, you don't have to scalp. There's other ways of trading these markets, obviously, and so consequently, you have to find the charts that help you maximize profit for yourself. Yeah, we're just kind of hanging here. Kind of, this is what I call the no trade zone up here. Market really not going anywhere, staying a little bit of range. Tough for us to get involved. So we'll just kind of wait and be patient and wait for our next opportunity. And the next support level we have, like I said, is down at 61 to 62 area. And then the next resistance area that we have is up at 74. And kind of in the middle here, it could do anything. I mean, we don't know. I wish I could tell you. I wish I could tell you what it was going to do. I mean, then it'd be too easy, right? Just be too easy then. Who wants easy? And everybody would be doing this, right? So, but you have to, you got to get yourself into if you like what we do here, you got to get yourself into a routine and find the things that work for you and then take advantage of those. We already got short when we came up here to 69 initially, so we're flat right now. The next level of resistance we have, which we would look to get short, would be up at the 74 area. That's the level that we gave out this morning. And the support level right now, based on price action, would be around the 61 to 62 area. And that's where we'd want to. Again, we're scalping. We're not trying to hit home runs. We're not trying to go and make 10 points on trades or 20 points on trades. You're trying to make 2 or 3 points on a trade, and we try to do them with the same amount of risk. And we're looking to get maybe 4 or 5 trades, depending on volatility and volume on any given day. So that's what we're trying to do here. And the methodology that we're using is, based on the work that we do. And again, the work that we do is taught. And you could, if you're interested in trading this type, we could show you what to look for, what to do when you get there. And everybody's got, again, they've got different risk tolerances and how you handle risk and how you get into them, how many contracts you trade, how you scale in, how you scale out. Not one person here is going to be trading the same way. I think we can appreciate that. Market coming up here. Next level of resistance we have is up at the 74 area. Yeah, we're coming up here to 73, trying to see what it wants to do up here. Again, obviously, if you're scaling in, maybe some of you are scaling in a point above and below, maybe some of you are scaling in half a point above. Just short here of your entry point, but be patient, see what it wants to do up here. Again, we'd like to get it on this bar, so okay, so the bar closed, so maybe take the upper end of the entry point there against the 74 if you haven't gotten filled there at the lower end, depending on how you're scaling in. All right, we're coming up here to the 74 area. See what it wants to do up here. Again, either case, make sure you keep your stops in place as we are hitting all-time highs here. Very unpredictable where it wants to go. These levels have never been tested before, but we try to find these opportunities either through Fibonacci's or some trend lines and stuff like that. So, but again, they've never been tested before, so they have their own uniqueness, and you have to trade them accordingly. All right, coming up here to the 74 area, kind of working this area now. See what it wants to do up here. All right, market trying to turn over here a little bit against our upper end of our entry point there. Could have made that, and we told you about changing your entry point based on the price action. And we're getting a nice little rotation here off of that adjustment. And trying to get our 2 points here. All right, so there we go. Got our 2 point rotation there against our adjustment out to 74 area. We talked about why we would adjust based on the uh, price action when we just missed it on that previous bar. And that just will let you get in top end if you got in at 74 also, and now you're getting paid off as well. So nice little trade there for you in case you did get in and take advantage of that. So all our levels here worked very, very nicely on a very, very slow day. And this is not our favorite trade, by the way. I just want you to know that. This is definitely not our favorite trade. These rally markets are very tough to trade. They're not trades. The opportunities are totally different. The dynamics are different, and the fact that we're hitting our levels and giving us a nice little rotation is a bonus for rally markets for us. Take care there, Philip. Always nice to hear you say that. All right. So all our levels worked very nicely here, and really not that much heat over any of these. Hopefully, you're able to take advantage of the levels. Again, we gave out these levels at the beginning of the trading day. And if we can look at the chat box area, you should be able to find them. There they are. And as you can see, the resistance level 63, 69, 74 all gave us an opportunity to scalp the market at those areas. And we had a nice little rotation off of them. Again, like I said before, these markets are very tough for us to trade, and for us to give us these opportunities today this is like a bonus for us. It is. I mean, I wish I could tell you. Yeah, I'm being honest with you. The rally markets are very difficult for us to trade, no doubt. But if you're trying to stay short here, you can try to do that and getting a nice rotation. Again, if you're trading multiple contracts, you can do that. And if anybody has any questions, feel free to ask us in the chat. We focus on the morning because the morning hours do give us good opportunities for us to trade. We started off very, very slow this morning, right? I didn't think we were even going to get many opportunities, but they finally did extend here a little bit, and then the market traded very nicely for us and gave us some few different opportunities to trade against our levels. And hopefully, you were able to take advantage of some of those opportunities. All right, we're just kind of now hanging up here again. We are flat. We had our opportunities to trade, and we hopefully were able to take advantage of those. And now we don't. We're flat now, unless you're trying to stay short, and then you can have a trailing stop or have a stop anything above 76. You want to be out of any shorts. Um, that's the only should. I mean, that's where we're at right now, being a little short up here. If you are trading multiple contracts and are looking to take a little bit more than 2 or 3 points on a trade, you could obviously do that if you have multiple contracts on and you're scaling out of them. Otherwise, if you are just even if you're just trading your unit and you got out, that's fine. You took a nice little profit, and now we're just kind of waiting for the next level on the upside we have, which is up at 80. Let me give you some levels up here above 80 in case market gets a little bit crazier and decides, oh, man, there's no reason why we should ever go down. Above 80 is 84, 89, and 96. But again, again, these are all-time highs, and this is what usually happens: that the market, makes a new high, and then it gets a lot of players in the market because uh, they don't want to miss the move, right? And they're like, "Oh my God, we're coming up to these all-time highs. I'm not long, or I don't even have a position on." So that's what happens, and you get this extension, like crazy extension, like we have here, like almost 100 points in a day or two. So these are levels. If you look at the chat box, the additional levels above the 80 that we have, we got 84, 89, and 96. And again, those are areas of resistance that we're looking for the market to give us an opportunity to scalp. But they're also all-time highs, so you have to keep your stops in place. And now we're just kind of drifting back down. Support right now would be around the 62 to 64 area. If anybody has any questions, please feel free to ask in the chat box area. I think I've been pretty straightforward with what we're doing and how we're doing things here. And again, the objective of our education course is for you to be able to find these areas on your own, know how to get into them, know how to exit them, then to maximize your profit potential, because everybody here has got different profit potentials, different risk tolerances. Not everybody trades the same. Bonds, after getting sold off yesterday are coming right back up, right? I'm almost at a 161 handle. Yeah, we trade. We exclusively trade the ES. The bond market is there for us to give us some maybe some guidance sometimes when we do get some reaction to um, some of the equity moves. There's some inverse relationships sometimes that we look for, but the real reason. Don't tell anybody. The real reason is because I used to trade in the bond pit, and I just kind of like to have the bonds up there. I feel at home when I see a bond chart. That's all. There is some use. We do put some use into the bond chart when markets are. If it wasn't for the fact that the Fed has decided to, you know, go all in the bond market, it would have been a really nice. It used to be a really great trade, but because the government decided to all this bond buying stuff and craziness that it does has basically eliminated the volatility or the trade there in the bond market. It used to be a good trade, but as you can see now, it just seems to be a one-way trade. We don't get ebbs and flows. At least in the S&Ps, we get some ebbs and flows. But so even though I got selfish reasons for keeping it up there, uh, I will say that there are some reasons why we could use it when the markets are kind of moving, and we have used it in the past to help us with our trade. Oh, well, we could say that educational use only, maybe to tell you what not to do. Again, another good question. Why do we only trade minis? Well, we feel that, or I feel actually, that you should focus in on one market to help you understand the dynamics of the market, when numbers are going to be released, how they affect the market, when those numbers are going to be released. I mean, there you could trade the grain market, you could trade the lumber, gold, forex. You have to know the dynamics that attach to those markets to be able to trade them efficiently. I think if I spread myself too thin, I got too many screens going on. I can't focus in on one thing. It takes me away from understanding what my goals are. You could take the same concepts that we have and focus in on other markets and use those same concepts in other markets as well. But I like to stick to one market because at least I know what numbers are out, how they affect our market, when people are talking, how that's going to affect our market. And I'm in tune with the dynamics of this market, and everybody understands it. And on top of it all, there's enough volatility in this market to keep me entertained any day, most of the time. And basically, I don't want to spread myself too thin and not understand other markets or dynamics that get involved, fundamental news that affects it, or anything like that. So I just stick to something that I know, and that way I can just focus in on one. I did a webinar one time, not webinar. Well, now it's called a webinar, but we used to. I did this get together with this guy who was showing his stuff that he was doing, and he put up his, I guess, spreadsheet of all the markets he was in, and what trades he had on and what position was going on, and I'm thinking, oh my God, how can this guy even focus in on one thing? I mean, he had maybe 20 markets up there he was trading. How in the world do you understand what's going on in those 20 markets? I mean, I was just surprised. But he did. He had 20 markets up there, and he stuff, and it was great. But I have enough try. I have enough trouble trying to understand one market for me to venture into a whole bunch of others. But like I said earlier, if you take the same concepts and ideas that we have and teach in our education course and methodologies that we teach, you could probably use those concepts and ideas in other markets as well. My background is that I used to trade in the bond pit on the floor of the CME, which is the exchange. And well, it used to be the board of trade actually, and now I'm trading electronically and trading S&Ps because the electronic trade has its own dynamics as well. And we just are trading here, trying to stay focused on one market to help us trade. I mean, I used to trade only the bond market when I was trading on the floor, right? I didn't go and trade options or different, grains or anything like that, cattle. I was just stuck with the bond market, and it. I guess I old habits, right? Stick to one market, understand the dynamics of it, and do well with it. And that's all you need. You don't need to spread yourself too thin. I mean, that's my it's my philosophy. All right, we come up here to the highs again. I think I said anything above 76. You want to definitely don't want to be short. I don't know if you want to get long up here, but you definitely don't want to be short. The bond market continues to chug along. Nice rotation there in the bond market coming off of yesterday's sell-off, where they basically said that they were. I didn't understand the bond move actually, because I thought they said that they're not going to raise rates anytime soon, and the bond market kind of sold off a little bit, but it's coming back today again. The flattening of the curve, it's steepened a little bit. I guess the longer term stuff adjusted a little bit. Maybe that's why. But now they're right back up here. So all right. Again, I appreciate the questions. Good questions out there. And you should keep asking if you need to know what we do around here. Again, we do this every day. We're here on I was going to say the Florida Exchange, but we're not on the Florida Exchange anymore. We're in my basement only because the Exchange is closed. That's all. I wish I could tell you differently, but it's can't. Unfortunate. No, the market is kind of staying steady up here. Next level of resistance we have is up at 80. We focus on the first couple hours of the day. So, right around 11-ish, 10:30, 11-ish, something like that. That's Chicago time. So, obviously, if you reached your goal before that, probably a good time to leave. But we feel first couple hours of the day gives us good ebbs and flows, of good volatility. Whatever volume is going to be in the market is going to probably be, especially these days, uh, when there's no outside influences. The morning trade is where you want to be. You get more opportunity. The volume is up there, gives you chances to trade. So the first couple hours of the day is what we focus in on, and then it gets very quiet after that. Yesterday, obviously, there was the FOMC, which created some volatility late in the afternoon. Not the kind of trade that we like to be around for. So we said, we made a little bit of money in the morning. We were off. And that's what we try to do here. We focus more on the morning hours to help us with our opportunities. Like I said, as the day goes on, the dynamics of the trade get totally different. The volume gets different. They suck whatever volatility is in there gets sucked out, and so it's a very quiet afternoon trade. You know, not the best for our concepts and ideas. We like movement, somewhat, some movement, and then the afternoon you get movement, and it's usually, excuse me, usually one way or not moving at all, and very quiet. So it's focus on the morning hours to give us some good opportunities. And then, like I said, if you made your quota, like we had a couple of our uh, students already left. If you make your quota, you can take off, right? There's no reason to stay. So it all depends. Again, everybody trades differently. Everybody has different risk tolerances. Everybody has their own unique way of trading, and I respect that. I have been around a lot of great traders, and I've never been around. I can never do what some of them do. Be honest with you, I can never trade the way they trade, and I'm sure they can't trade the way I trade. So everybody has their own niche, and you have to find your own niche to be able to take advantage of the trade. No, that's not me. That is not me. That's Brad. That is Brad. That's the guy with the glasses in the video. I am good. You have my mug in the website. If you look at the website, you can see my mug. He's a cool guy. Yeah. I can never look that cool. I need shades. I don't have shades in my own basement. That would be. He's got shades in his basement. It's kind of cool. He's his own unique person. He can only pull that off. I can't. It's one look, I'll tell you that much. It is a look. I mean, let's put it this way: if he was in the pit and he came in the floor looking like that, yep, he would get a few comments. I'm just saying. He might kick me out now. I don't think he can hear me. That's a good thing. Yeah, yeah. All right, Mark. You keep thinking, Mark. You keep thinking. That's where you go wrong when you start thinking. Just keep thinking. That's exactly the way you should be looking at it. That's exactly how you should be looking at it. That's the best explanation I could have ever given of what we do here. Well, that's the point of this whole thing anyway, right? I mean, I've been around long enough that it takes a lot for me to get excited about any market. So I know for some new folks, who've never traded before, it's all you get all nervous. It's been a while since I got nervous in a trade. Get upset in a trade. I don't want to get nervous in a trade. But I'm trying to calm everybody down, right? That's the key thing. So and then focus on the trade and let the market get you out of the trade, not your fear. All right, we are not. We're kind of flagging up here, looking for our next move to the upside, probably. Kind of going nowhere fast. Again, support right now would be around the 67, 68 area. That's our next support level. Next resistance level would be up at 80. We get below 66, might move down to the 62, 60 area. Alright, we have our parameters right now, and right now, when they sucked out all the volatility, it gets a little bit quiet. But we've had some nice trades this morning for us, and now we're just kind of flat, and we'll wait and see what happens. Right? I mean, we can only take what the market gives us, or it doesn't give us, and then go from there. Right? And this is where it gets like towards that afternoon trade. I mean, once we get past the morning stuff, gets quiet. This is where we're at right now. So I just don't like to talk for the sake of talking. I mean, I would rather talk about the market, but unfortunately, there's not much to talk about at this moment in time. So I kind of run out of things to say all the time. So if I'm quiet here, that's what happens. And then probably Brad will come in and he'll start chit chatting. All your peace and quiet is gone. All right. So again, we got to get above 76 for us to rotate higher. And right now, support would be around 68. If we get below the 66 level, we might push down to 60. And but we never, we just they definitely sucked out a lot of volatility in here, and volume has definitely decreased, and we're getting range bound. So be patient now. We've had nice opportunities this morning. We've had our levels that all got triggered, and hopefully you're able to take advantage of all of them, or even a couple of them. That would be nice. All right, you don't have to take advantage of all of them. Not if you didn't want to. Just saying. Just saying. I would downtick in here a little bit. Support will be around the 68 area. Now you will get some moves here, you know, because of the volume and the light volatility that could surprise you at any moment, right? Because there's not that much volume to keep markets up sometimes, and you get an over exaggeration of a move at any moment in time, especially as the day goes on here and the volume gets sucked out of the market. And market kind of turning over here a little bit. Again, we talked about a little support down at 68 area, anything below, and if we step below 66, out of any longs, and we'll see what happens. Again, everybody has any questions? Good time to ask. As we are coming here to the end of our morning session here, as you can see, the volume has definitely been sucked out of the market a little bit. And nothing wrong with that. It just what is what it is. All right, there are the levels that we're going to use for the day. Obviously, below the pivot, there are support levels, and those are intact. Obviously, when I gave you the additional support levels, those are because of the price action opportunities. So we had to make those adjustments according to that. But you can see there the levels below the pivot are there for us to be able to use. You can use those all day if we do break down and start trading below the pivot there. But that's where we're at for the day. And you got right up to that 74 area. And if you wanted to get short again, it kind of was tough to say that you wanted to get short up there, but we did give you an exit strategy above 76. We did say that you don't want to be short above the 76 area. So if you wanted a tight stop, you got one. And once we got above 76, you could have easily exited any shorts there if you had a tight stop against it. And again, if anybody is interested, you can see the in the chat. You have the link there to our website. give you more information about anything that we do here and how you could be a part of it. There are a lot of traders that trade that way. You just don't see it because of the way the markets are trading with the electronic trading. They just don't show it. This guy just showed it. But the reality of it is, there's plenty of 1,000 lot traders out there, 500 lot traders who are just scalping the market. It just you don't see it out there. They don't show it. They don't show. They don't like to show their hands, but they are out there. So I mean, that was like an easy. That was like a. I don't know. Sometimes they just don't like to show it like they just did, but they there. And I stood. I was standing next to a guy who did 400 or 500 lots. That's all he was doing, and he did them. Actually, he was a he was trading in the he was trading S&Ps and doing that size scalping them. And he had somebody on the floor trading in the big S&P pit, and he would like take orders from one market and basically uh, arbitrage between the S&P pit and the S&P and the mini, and he would be trading that size. It's there. It does happen. You just don't see it as readily, but it does happen. Well, I mean, it's the algorithm, right? I mean, they used to do that on the floor too, because they used to say, uh, they used to tell the broker, okay, sell me 1,000, but only show 100 at a time. I mean, I would hear the order come in from the desk, and that's how they would. That's how he would tell the broker to. I mean, the customer at the end of the day, the customer can do whatever he wants, right? I mean, the customer has the money in his account, so if he wants to do 1,000 lot, he can do 1,000 lot. How he does it, it's up to him. So it used to be on the floor. I'd hear the order come in because I'd stand next to the broker, and he would tell him, "Okay, sell me 1,000, but just show 100 at a time." And that's what he would do, or show 200 at a time. And that's how he wanted it to be filled. He didn't want to spook the market, so he would tell him to do it that way. So that's another reason you don't want to you don't want to show your hand all the time, especially if you're trading big. You're afraid somebody else is going to jump on it, or whatever. But it is what it is. Not a big deal. I mean, you could tell the algorithms are working. Sometimes you can see when it trades at a level, it's trading, whatever was offered or bid, they take it all out, right? It's all gone, and they're still showing 100 lot, right? Same thing. Exactly the same thing.
A couple quick programming notes. You have any questions about our services, don't hesitate to ask. If you have some friends you'd like to invite in, you can do that by having them go to tradealonglive.com, tradealonglive.com. If you need a repeat of the levels, let us know. They're usually found in the chat area. We're coming to the end of the morning session here. The body of trading is done between the hours of 9:30 and 11:30. If you haven't done what you are looking for based on your trade today, and you'd like to have us help you based on our Trading Academy, Trading Academy is done a little bit differently. This is a opportunity to go into private class and be mentored by Saul, adding in or adjusting some of the pieces of your puzzle so you can get back to focusing on what we call the opportunity to develop consistent profitability in your trading. We're looking to do 2, 3, 4, 5 trades during the morning session if available. We're not in a rush to get anything done. We're not in a panic to make sure that we make money any particular day. The concept here is, how do you be confident and comfortable in your own skin based on your own trading and be able to apply that during the morning session based on this Trade Along Live intensive session. It's where we look to get our business done and bank our money. We open up at 9 a.m., go to 12 noon. We do our business ahead of the 9:30 bell. We do our business after the around 11:30, 12 noon. We work with traders that are looking to get set up, looking to talk to traders about the opportunity to join Saul in his mentoring in the academy, and also answer questions and field questions about our services and what we do, how we do it, why we do it, and what the opportunity for you are, based on those services. So we do a lot of interesting things based on being live with Zoom. We feel like Zoom has given us an opportunity to really focus in and help traders bridge the gap from where they are, where they'd like to be, based on live charts, based on the ability to talk and communicate together between you and Saul, based on the academy, and the opportunity to take what you've learned or you're learning or how you've been adjusted and tweaked. We call that a trader tune-up or a trading tune-up, as you're being mentored by Saul, and then bringing that in here to the Trade Along Live session or the intensive during the morning session as a proving ground, an access point to Saul as you are A, applying your newfound skills, B, you are receiving Saul's levels and zones from an educational point of view, and his commentary during the intensive during the morning session. Hopefully that gives you a real clue in about what we do, how we do it, why we do it. Don't hesitate to ask questions. That's a very good question, and thank you for that question. I'll post the information about the link back to the website. The website is tradealongtradingacademy.com. tradealongtradingacademy.com, which I think is, it's a new site based on the concept of utilizing Zoom as it relates to trading education, which I think is pretty interesting from a development point of view when it comes to learning how to trade. One of the things I think was missing, quite frankly, is the opportunity to really delve when it comes into what you're doing on your side as the attendee or trader in the education, and what to shed and what to concentrate on based on this side. So the trading education really is a dynamic between you and Saul as your mentor. So what happens here is that you have the opportunity to be skill, add skill, take stuff off the plate that doesn't belong, and then come into the intensive and apply it and ask questions as it relates to what you're still missing based on your trade. So if you go back to the core elements of price action trading, which I consider, in my humble opinion, the last bastion of hope for traders, because you get so twisted and turned around by standardized software, which is any platform, with all the lagging indicators, bells, whistles, and all the distractions. And quite frankly, the trading, or the, how should I put this, the overall business associated with setting up a business and trading, and all the things that individuals try to tie in or are being forced to tie in to what they're doing. A lot of it is just excess baggage. I mean, it's great to know the lingo. It's great to know how this all started. It's great to know all sorts of cocktail conversation, or conversation you can have at cocktail parties. But the money, where the rubber meets the road, in my opinion, is at the price action level of the trade, and what you as a trader can do there based on your entries, exits, and stops. Now think about that for a second. If you narrow your focus like a laser beam down to the action of price, and you develop that in your, or as an art form, then you've done something for yourself. Now, the S&P 500 E-mini is a great instrument to trade. That's why Saul focuses on it, because it gives him an opportunity on the upside and the downside of the market to bank his money. And if, in fact, Saul's levels are really good, which we let you determine, and better than the spoon-fed levels from your software, from calculation, or all the other levels, and actually just separate it. The herd is using a bunch of levels that could be really valid, but the fact that the herd is using them causes problems, causes people getting stopped out of their trades, like regular traders, and then the market goes where they thought it was going to go, which is painful. So if you boil that down to, don't pay attention to your standardized software, don't pay attention to the crap that it feeds you, don't be part of the herd, because the herd itself, if the concept of trading failure is in the high 90 percentile, why would you want to be part of the herd? If in fact you come in here and you receive Saul's levels, and what did he give out today? Let me just see. He gave out, as I scroll back, levels. Gave him out an audio, and then they were reposted by Mark, which, Mark, thank you very much. He had the 46.58 as his pivot. Then on the upside, he had 63, 69, 74, 80, 84, 89, and 96. Below, he had 52, 47, 42, 36, and 28. If you strip this opportunity down, those are the levels. That's what Saul is looking at based on his trading. Those are the levels that Saul went to his screens right around the cash open and set for his own trading. Saul believes it gives himself a trading advantage over other traders by having a skill set to set the levels, and then the wherewithal and the know-how how to adjust. That's why he calls them levels and zones, based on the reality of what the market is giving him in his own trading, and how he adjusts his entries, exits, and stops. Does he go short, fade, long, momentum? Where does he enter a trade? Price. So actually, I should back up, because I think I forget about this part, is that as you are going about your business and you're seeing price change and you're seeing how the market is interacting in and around these levels and zones, you got to make a decision. Am I going long or short here? What am I looking to get out of this trade? Am I looking for 2 points, 2 points plus? How am I feeling? I hate to say it, it's an art form, right? What are you sensing at that time? And then you make your entry into that trade. And you may get a sense pretty quickly to get the heck out because A, you don't want to get stopped out, and B, it was the wrong trade. That's the point you want to be based on your art form of trading. And who is going to teach you and school you in the art form from where you're at and where you're going? And that's what we do every day here. That's the opportunity based on the Trading Academy, the tune-up, your addition of price action into your trading arsenal, and then the application of that in the trade based on the Trade Along Live intensive between the hours of 9:30 and 11:30. So the intensive opens up, or the opportunity opens up at 9 a.m. and goes to 12 noon. That's your opportunity to apply your craft that you either bring with you, which is great, and you're a subscriber to the service and you're happy to have Sol as your wingman, and you're very happy to receive his levels, and the commentary based on an educational format only. And then the opportunity to spin back into, if you so choose, into the Trading Academy to ask questions, interact. It's great for new traders. Why? Because they can be set up and off on the right foot. They don't have to waste time and effort learning stuff that doesn't apply or that causes problems, headaches, trading losses. And they can focus, again, where the rubber meets the road at the price action level of trade, learn the whys, learn the do this, don't do that, and then strip it down to the elements, entries, exits, and stops. Sol generally has in his own trading, when he comes into a trading day, a neutral stance based on where the market's going up or down. He has a general 2-point stop. He's looking for a trading profit on his trades. So take the trade as a whole. If he's going to step in, all things being equal, he is looking for a minimum trading profit of 2 points plus. He is protecting his downside at 2 points, and I would venture to guess, based on what he knows and what you may want to know, is that his entries, exits, and stops are different prices than you may pick right now based on your current trading technique. So we have set this up as a modern approach to trading education, where it is done in a live environment during the live market, where you can go into a trading intensive situation, focus on Sol's commentary, his proprietary scalping levels, and then the concept of coming out of the session with a profit. If you have questions at the end of the intensive, ask Sol. So what we have done is we have separated out the subscriptions into segments. Trade Along Live has its own subscription rate. You can get it on a monthly basis. You can do that by going to the website and signing up. You can add 1 month rollover, and you can cancel any time based on your wishes through PayPal. You can also, if you so choose, sign up for 6 months and get a month free, which is a great deal. You could also choose to bundle Sol's trading education, his mentoring, with access to the Trade Along Live intensive. That's a great bundle. That means that you are being schooled or have the opportunity to have your questions answered based on the reality of the trade in private session in a private Zoom room with Sol, and then come into the intensive and see how it works. and then ask additional follow-up questions. I don't think it gets better than that. And that's the modern way of looking at the concept of learning how to trade, by being taught and mentored by somebody that has been doing it for 25 years or so. And that's a choice. If you first come in and you get Sol's levels and you join the Trade Along Live Intensive, that's a great start. You get his levels, you get his commentary, you get the reality of what's happening based on price movement and price change, and the opportunity to work out your issues based on your trade. That's what we do every day. It's very simple and straightforward. We ask you to take the time to go to the website. Trading is about money. Trading is about trying to hold on to your capital on your end from a risk capital point of view for your trading business. It's also about knowing what you're doing versus winging it, or, in my humble opinion, being sort of whipped around or trying to catch a ride on a market, like a roller coaster, and hope you get out. It's almost like getting on a roller coaster and hopping out while it's still moving, instead of what we like to call the disciplined trader, the disciplined approach to setting yourself up for the trading morning, letting the market come to you based on its action and price movement, and then adjusting and tweaking yourself as it relates to your entries, exits, and stops based on knowing what you're doing, and then wrestling the market for a short period of time in an orderly fashion, and coming out the other side with your money on the table instead of your money off the table. Now, the key is, how do you beat your seat fee, your commissions, and have a positive impact on your P&L for your trading business? I go back to the old adage, is you're the owner of your trading business. Who the hell hired yourself to trade it unless you know what you're doing? And we're here to help you bridge that gap. It's pretty simple stuff. Let me know if you have any questions. I'll be glad to help you. I did post the opportunity to go visit the website. Check it out. If you have any issues, let us know. It's a new site. It's got the ability to do everything through PayPal, credit card, however PayPal does its business with you, and the opportunity to sign up and be part of this world on a daily basis. So the ball's in your court. So UT, let me know if that helps you. Hey, Roop, how are you? Robert, how are you? Richard M. Hey, Mark, thanks. Mark, let me know if you're awake or done your business and made your money and gone back to bed because you're an early riser. Maharufton, let me know. Hey, Leo. Joseph. Hey, Joel, Frank, Edward. If you want to upgrade yourself from the Trade Along Live session, in other words, if you're a subscriber already, and you want to add in the bundle with the ability to go into private session with Sol and get yourself tuned up based on your trading, let me know, and I can work it out for you. Hey, David, Jack. Hey, Jack, you're signed up for Sol's session, right? So let me know back in chat. BAI, Sal, let me know. I'll be here. Give me a quick hi sign, how we can help you. So, UT, check out if you go to, and listen, it's a new site, so it could be an issue, right? When you go to the website, when you go up to the services area and you look at the area, there's a couple different ways to go, right? There is the Trade Along Live section, and then it says like a breadcrumb on where to go. And then below that, it has the Trading Academy info. either way, when you click on it, it should go to a page where it has the ability to select your area of interest in the drop down, and then you can see it in there, and you can make your choice. It's interesting. One of the things that has come up is that trading's a big business. If you're not making money trading, then that's a tough thing. If you are trading and you're not making money, that's a tough thing. At the end of the morning session or the intensive, if you haven't made the money we charge monthly in that session, you got work to do. You got a lot of work to do. So that's an interesting thought. So when we were putting this together, it was interesting to me that I don't know how to put this, just Saul's levels and the opportunity that presents itself from an educational point of view to get Saul's levels is really a unique trading advantage to you as a subscriber to this service. And you should or could or have the opportunity to bank money off from an educational point of view only, Saul's levels. Add in his commentary, and you should, and you could pick up on it. That is a unique, real positive advantage to you as a trader and a subscriber to this service. At the end of the morning session, based on a trading day that's giving you opportunity, because some trading days don't. We've heard that from Saul, right? That, if you're not making money trading, and I could come up with a number, right? Double the fee, the monthly fee. Depends on how many contracts you're doing. If you can school yourself and utilize the information that's provided from an educational point of view and the information in and around Saul's levels with one contract and simulation and get really good at it based on the rules, and then go to one contract in real time and do the same thing based on the rules, the action of price and the fundamentals of price action trading, and you get good at it, well, then you're banking money. You raise your contract size, and now you have a trading business that has legs. Now, there's no guarantee that anybody will make money trading. There's no guarantee that if you do everything that is provided in this service, you ever make any money. But you can witness Saul's levels and the action of price in and around his levels on a daily basis. If Saul is good at his craft, you'll witness it. If Saul's levels are any good, he gives them out to you right around the cash open so you can witness what happens during the morning session and how the market behaves, price action, price change of the S&P 500 E-mini in and around those levels. And you can witness that for yourself. And you can make a value judgment based on what your needs are and what you're looking for. But it's interesting to me that from a concept of making money, you're at risk. You have certain criteria you have to meet to have a trading business based on the risk capital associated with your account. And the concept of trading gains and losses is pretty significant, especially on the loss side, for individuals that don't know what they're doing. So the concept of being offered an opportunity to become a professional, and we'll just use the term professional gambler, right? Controlled, sophisticated, smart, understanding of what you're doing, and picking your spots and being able to put more money on the table than you put up versus being a gambler, which is an individual that comes to the action not quite knowing what they're doing, but gets caught up in it and loses their money. And then you make a value judgment for yourself. Which one do you want to be, or do you have the temperament to do it? Because some people don't have the patience. Some people don't care. Some people think that the action is more important than the money. There's all different, head spaces for people. And we try to work with the people that are, or we invite the people in that are part of the headspace that are interested in developing a discipline and exercising it. And when they stray, come back in and get the discipline back. And that's the relationship that individuals have with Saul. And that's a very important thing. So anyway, so that's what we do. So, Judy, were you able to find that on the website? I mean, I'm hoping that the breadcrumbs on the website are okay for what we're doing. It would be a shame if they weren't. Okay, good. I appreciate it. I don't know. I, in the past, have been not fans of having a secondary place to go other than here. We look to drive all interested parties or parties that should be interested into the concept of this Zoom room webinar, and then spin people off into where they're interested, which is the Trading Academy and the mentoring with the intensive trade along live session during the morning. And I think that that's part of the craziness of the internet, what's out there, and what, quite frankly, the ease and the freeness of it all, and I'm talking about dollar free, when it comes to what's out there and what people get caught up in. And we can't really do anything about that, but we ask individuals like yourself or others to, if you have individuals that are interested in trading or could be, to send them to that tradealonglive.com link. Like if you put that into a browser, that'll come up as the link to sign into Zoom directly into the webinar. And then from here, we look to distribute people with, based on their interests or needs. The website is really the fulfillment part where it comes to people choosing what they want based on the subscription. And then they have control, or you have control over PayPal. And you can come and go as you please based on what you're looking for. So you can be the decider in chief when it comes to your own trading and your own trading education, in this experience. And you can cancel it or not. In other words, you can keep it, let it roll over. Great. The concept of bundling in the Trading Academy is interesting because you have the opportunity to come and go as you please, and also spend time, be involved with Saul when it comes to where you're at and where you'd like to go. And everybody's different. And the opportunity to add in what you need and subtract what is causing you problems, and then focus on that, and then be tweaked and adjusted based on the results. And really, trading is the art form. The end game is the art form, and you're the artist. And the key is, how do you get the money into your account and hold on to it, and chip away, and make bank. So anyway, so right now we're coming up on 12 noon. We're going to end the Trade Along Live session. An opportunity when it comes to this segment If you haven't made your money, you know what to do. If you're looking for additional stuff, you know what to do. If you don't know what to do, ask. I'll be in the background. The afternoon session can be utilized for academy time based on your relationship with Saul and your signing up for that part of the business, of that part of the opportunity. That is personal and becomes personal between you and Saul, which is a great thing. And it's really about knowing your mentor and your mentor knowing you and developing that kind of personal relationship and then being mentored in the art of trading the S&P 500 E-mini. The art of trading and the vehicle being the S&P 500 E-mini. All right, so I'll be in the background. Appreciate you being here. Hey, Sandy, did you have a chance to review the website? I know you were having some connectivity issues yesterday. Just let me know back in chat, Sandy. Hey, Joseph T, any additional questions? Richard M, same. Asal, the same. BAI, the same. David, let us know. And UT, let me know if you need any help. Thank you. Hey, Yuchi, that's a good question. So the Trade Along Live intensive, which you were just a part of, is from the hour or are from the hours of 9 a.m. to 12 noon, with the intensive part between 9:30 and 11:30. That's where we have individuals come in that are subscribed to that part of our service. And what they bring with them is or their own trading strategy, and they're looking for Sol's proprietary scalping levels as a trading advantage to them from an educational point of view. And they're looking for Sol as a morning session. And you were part of that based on the questions you were answering. So we also have new people, guests come in like yourself, that get to experience that. And as they experience that, we hope that they appreciate the opportunity that's presented to them based on what we call the Trade Along Live Trading Academy. So the session that we just went through is that session. It has a subscription price, and people just subscribe to that. That's also the introduction to Sol's services, which you were part of today. The afternoon session is dedicated to those that are part of Sol's trading education, and he has a personal relationship or would have it with you, and he would set up times to school you based on where you're at in your trading. And that is done in a private, separate Zoom classroom where you have the power of the Zoom technology. You have Sol and you, a couple other people, depending on what you're going over. And that is your area to be schooled, be reschooled, to be tuned, retuned based on where you're at in your trading and where you'd like to be. And the opportunity for you as part of that trading education, trading mentoring experience, it's bundled so that you can come into the Trade Along Live session, which is the intensive morning session. So it's your choice. So when you go to the website and you have options to pick, the first option is to subscribe to the Trade Along Live session. That has its own fee, and you can do it monthly. You can subscribe to the Trade Along Live session for 6 months and get a month free. You can pick the option, which is the Trading Academy option, where you get the trading education and mentoring from Sol, and it gives you access, an access pass included in that price to the Trade Along Live session, the intensive. So I think for individuals that are either new to trading or not getting it done based on their trading, and they want to start to have that happen, then they would be a candidate for the bundle, Sol's mentoring and the access pass to the daily Trade Along Live session, which you were just in. So it's really a choice for you. You take choice A, which is the Trade Along Live session in the morning. You could take choice and choice B would be the trading mentoring, which includes choice A off the menu plan. It's pretty straightforward stuff. And just let me know how I can help you make your choice. If you want to talk privately and personally, we can talk on the telephone. We can talk through Skype. We can talk through, other, like Snapchat and that type of thing. Just let me know. We're trying to be as modern as we can. And again, it's tradealonglive.com. Tradealonglive.com is the link to come into the Zoom. So if you have somebody that wants to drop in and check it out. And if you're interested in class, mentoring, learning, I guess it's no different than hiring somebody to help you in any endeavor in life. If the failure rate and everything is a lot, then getting help is good, and get the right help is better. So then you would go to tradealongtradingacademy.com, tradealongtradingacademy.com, review, and pick which way you want to go, and we work you right into the program.